Hello everyone, welcome back to another video. So this is the third part of the volume profile series that we've been publishing for the last 2 weeks. So for people who are new and who have not seen the previous videos, you can go ahead and watch the previous videos. So to recap, what we have discussed in the previous videos is how to use high volume nodes, low volume nodes, the POC, that we have here, that you can see over here. Then we've gone in the previous session. What we discussed is the day types, that is the session types, the B profile, the P profile, the balance profile, the trending profile, and so on. So what we'll do is we will just use some of those ideas or concepts that we discussed in the past few sessions, apply them over here a little bit, and also discuss primarily, that is the focus of this video, is discussing about value area. So first we'll go ahead and discuss how we can use value area, what is it for people who are new, how we can use it, and then finally we will combine it with the ideas and the concepts that we learned in the previous videos. So as you can see over here that what I have done is for plotting the value area, I have these green lines coming out. Okay, so how you can do that is you can go over here and go to the settings. The other way to go to these settings is straight away from the step profile over here, and if you click over here, you can go to the settings right here. In the exact same manner, you can adjust the tick size and whatever you like. So for example, if I change it to, let's say, 1 or 80, so what you will see is the ticks thin out a little bit more, and the volume that will come out is would be more granular. So you'll see something like this. Of course, the data is loading, it is too data intensive, so maybe it takes a little bit time. So you'll see it like this. Okay, so let's leave it at 180. Now let's get back that on so that I can show you what I wanted to show you. So you come over here and you see the value area view. I'm sure a lot of you guys would already be knowing, but just for people who are new, you can select borders. If you select area, what will happen is you will see the outside value area to be a little lower in shade. I prefer this, so I keep it like this. Now by definition, what value area is approximately 68.7, or let's say 70% of the volume that is transacted throughout the day is shown by way of either these lines or whichever view you like. Now the traditional way to use it is, for example, there are 2-3 scenarios that come into play when we're discussing value area. What happens is, for example, if the market opens above the value of yesterday, for example, let me delete this, and for example, let's consider this wild day. Okay, and if you look at the profile, you see a lot of nodes. We'll discuss this and how you can actually use value area other than the traditional way of using it. That is, if you see that the value area, 70% of the value or the volume was transacted in these zones. Now whenever the market opens above the value area, what generally is the idea is, if it tries to break and doesn't, we are going to expect the entire since we see this is a balanced area, we're going to see the entire session play out above this zone. So this is one way of playing it, because the first time it rejected, and when we see it reject the second time, you take a trade off here and to the POC. So this is one way of playing the value area. The second way is, for example, if you see a breach of this, the first target generally what people look at is this POC. Okay, and now again, this is the conventional way. We will, after we discuss this, we will go into the a little bit of variation of this exact same thing. Okay, so this is one way of using the value area. The next way is, let's say the market opens within the value area of the previous session, which happens somewhere here. So it tries to breach the value area high, and it fails. So what we're expecting is, we're expecting a touch of at least the value area low of the previous day, that is this one, and the next target again becomes the low of the day, and then so on and so on. So this is the second variant how you can use the value area. That is, the first one is if you're opening outside of value of the previous day. That was this case. Okay, that was the 14th of May, and we opened outside of value of the 13th May volume profile, and on sorry for that, and on 15th of May, what we saw was that we opened within the value area of the previous day, that is the value area of the 14th, and a good trade or a logical trade by by books or by definition of value area is when it rejects from the value area high, we target the value area low of the previous day. That happens, and then eventually the low of the day of the previous day, low of the day. Okay, so let me do one thing. Let me turn it to manual, and now we can do it without any hassles. Okay, so that happens now. The next variant, so you can see how interesting it is. We've got all the variants lined up in the past few sessions, so that is how volatile the markets have been. Okay, so and Bank Nifty is a good instrument to actually look at these concepts. Within a week you can see 3-4 variants of the value area that we're discussing. Now comes the next part. Again, in the previous part, in the first variant that we discussed, we could never breach the value area of the previous day. Now when we come into the 16th of May, what we see is again the market does open outside of value of the previous day. Okay, it tries to take out the high of the previous 2 days, fails over here and starts going down. Now the first target, when you see something like this, if you intend to take a short, that is, you feel or you have some confluences, let's say it has rejected the high previous day 2-day highs. So what we generally see even in the market profile, this is called a weak high, but what we see is if something like this is happening, the market or the auction will try to shake out weak hands. So what it does is what we expect is a touch to the previous day value area high. Okay, so exactly similar to what we had here. We opened, this is exactly the same thing. We opened outside value, we tried to go up, we failed, and we touched the value area high. So till this point the scenario is exactly the same, but what happened here is we saw a lot of rejection happening. So when we take a long here, we expect the POC to touch and then the value area high maybe. Over here we see one rejection, so one trade is good. We get the touch to the POC, that is a very good trade, that the first time it happens. It again fails, but look at the difference in the bars that happen here and here. I'll just delete it. So on this attempt it fails again, but over here on this attempt it doesn't fail and it breaks. So when you do that, obviously the first point is the POC of the previous day, which is very close, and since the profile was very range bound, or it was, if you see, this range was very small, so what you can expect is a touch of the value area low of the previous day, which happens, and surprisingly it breaks even that. So the next target again becomes your naked POC that you've been getting from the previous profiles, and you can see a touch of that happening exactly. In fact, it breaks a lot. I don't know whether this was actually real. Yes, it did happen, and something like this, a freak trade happened with a lot of volume, if you see over here. Okay, so obviously these guys were flushed out here, and then this takes place. So we've seen 3 variants that keep happening. Now comes the 4th variant, in which again we open inside the value area. This was the second case that we discussed, and we then eventually, when we open within the value area, we touch this point, the low volume node. Again, this is what we're going to discuss after a little while, and we this time attempt to take out the value area high of the previous day, fail the first time, get a good pullback, and then eventually take it out. Okay, now what essentially you're expecting is after this, so whenever you get the next trade to the value area high, which is coinciding with, if you look at this carefully, so it's coinciding with the value area high as well as the swing, the previous swing high from which the market broke, and this is the area from which it broke. So this day, these are the 2 places or 3 places where you can target a long, because it's been rejecting from the previous value area high, and again a POC is a small target. You can target the value area high of the same day. Sorry. Now so we've discussed almost all scenarios, the 4 scenarios, that is opening outside of value area and breaching the previous day value area. The second case is opening outside of value area and staying outside of value area. Then comes the part where we open inside the value area and stay inside, and the last part is we open inside the value area of the previous day and breach the value area of the previous day. So the 4 scenarios we've discussed. Now this is the latest session that happened. Again, it was a test session, so the volumes were low, and of course we are not able to breach the value area high or low of the previous day. we remained inside value. Now days like this, let's not consider what has been happening in the past few days, because obviously the VIX is high and the volatility is high, but generally what you'll see is days like this are very, very common in Bank Nifty, even though the movements are higher, but you will see overlapping value areas and profiles as well. So these concepts of value areas become really, really significant and great to play out these to find intraday plays. Now what we'll do is we will go a step further, and not only do we use the value area, we'll use the high volume nodes and the low volume nodes that we discussed in the previous few sessions, and combine it with the value area. So what do I mean by that? So let's go to this session. So if you remember, we discussed this particular session on in the last week's video, and what we discussed is if we had to go lower, we had to break this particular high volume node, okay, and if we breach this, we can expect a downfall, or maybe going down to some of any of the supply zones or demand zones rather. And finally we did attempt to when we opened, again this is a scenario, we opened inside the value area but right at the value area low, and within the first 10 minutes we broke this value area low. Now this scenario is it shows some sort of initiative selling. Again, this is a concept we'll discuss in the upcoming videos. So what do you mean by initiative selling? Is as soon as the market opened, the first attempt it failed, but immediately in the if you have something like this happening in the first half an hour or so, it's called initiative. That is in the A period. If you look in the market profile of the first half an hour, you see the market move away from value area immediately as soon as it opens. Okay, so this is a very good scenario, and it happens a lot of times when you are having a trend day. Now again, this is not a 10-day, but at this point we were not to know. And if you take a trade as soon as you see this immediately as the market opens in the first 5, 10, 15 minutes, you get a breakdown. So this was a clear indication that we opened inside of value, absolutely at the edge of the lower edge of the value area, and we broke out of it. So obviously this becomes an aggressive trade, especially if it is happening in the early part of the day. So you can expect a sort of trend day. If not trend day, you can expect something like this, highly volatile, and the market moves down. Now this is one session type that we discussed, that the market moves down in the first ABC period, or the first 1.5 hours or 2 hours. It forms a node. Okay, now when we were discussing if you remember, there are two variants that can happen. If it has happened earlier in the day, I mean A, B, and the first half an hour, 1.5 hours, you found this, and the market doesn't do this, and it tries to break in the, let's say 10 to 10:30 to 11, like it happens over here in market profile. We generally expect this to happen after E period, during the E or the F period. Okay, so when it starts happening there, the E in the F period is nothing. You divide it into half an hour intervals. Again, we can discuss this in the future sessions. So let's say after 10:30, 10:45, the market attempts and is successful in breaking this high volume node. And we discuss this session time. If it happens, what we can expect is a touch of the high of the day. So if you've not seen this, you can go back and watch that video. This is the first part of the series, and you touch the high of the day. Now something even more interesting happens on that day. Now what we generally expect after this is variation. This is a huge variation that is happening. We expect, let's say, a break over here, at max a volume node over here is what we're expecting. But what happens is absolutely phenomenal. So you see the what's happening. So this is an indication of a lot of big players are in this, and this can really hurt people if you're not careful with it. So we form another node that is quite common, and once we break it, of course we now recognize that there is strength. Now when we saw the initiative selling, this is called responsive buying, and when we break the high of the day, okay, over here, what we are expecting is, or rather what I was expecting, and is more common than not, is a trend day to the upside after this. So what should have happened is, or else what I thought was, after it broke and it this node, what should have happened is taken a support here and moved up at least till point or a little bit more. What rather happens so you can divide these zones into 4 value areas rather than having just one like this. So why I'm telling you this is because this is a very good day to understand how to play moves like this. So instead of having one value area, you can divide it into 4 value areas with high volume nodes separated by these low volume nodes. Okay, now you play these zones separately. So when I see something like this breach, and what we are expecting is a touch of this part and maybe a breach of this high and go over here, but what happens is it doesn't even give us a chance. It does give us a chance somewhere here. This is where I would have preferred to take a trade, and I would have if not here, I would have at least targeted the high, or even this was a good I mean, if you see, look at it, it was a good almost 120 points. Okay, it doesn't happen like that, and it I mean, it does give you 120 points and then fails. So I am not what we can expect is the whole market to after this to play out somewhere like this. But what happens on the contrary, it breaks over here and touches the previous value area, what we are calling it, and touches right at the bottom at this zone and takes another pullback from here. Again, what we are expecting at this time is to hold over here, because we're seeing that responsive selling. Let me delete everything again. So what we're noticing is, if we draw these zones, what we were expecting is, we were expecting when it breaches this zone, let's say, we were expecting it to now hold somewhere here. But again, to a surprise, what it does is it breaches this, and look at the speed with which it does this. It does it in a almost not even a 5-minute candle. It takes out this zone. So that was quite interesting, and it ends to the other part of the zone. So why am I explaining this particular day is that you can see all types of variants or all types of things happening within a single day. Okay, so if you divide this into small value areas like this, instead of the conventional value area high and low over here, you will find it really difficult to trade if you trade only by the value area high and low. So you have to divide it into 4 value areas and then play it accordingly. Now comes the interesting part. We saw this move up move. It can be short covering, it can be new buying. So how do you confirm that it is actually good buying? What you do is, when this happens in the later part of the day, we in the market profile terminology, we call it spike. Again, it's nothing too fancy. It is just that it happened after 1400 or 1330, 1345, and you saw this with really good volume. So you can see these 2 red candles. These are the candles, this one and this one. Now when we see this particular thing happening, and of course the actual traditional conventional value area is this. So if this buying is legit, what we want is that this value area low should not break, or this low volume node of this value should not break, which it doesn't. It trades within this day. So this day you could have taken maybe in the 3rd or 4th attempt a good long to the POC and so on. Now the similar thing, since it held over here, what we are expecting is a similar thing to happen here. Of course, it breaches, like we just discussed the scenario, it breaches here, so we're targeting this. So over here also what we're expecting is a break back and a value of sorts forming here. But again, we don't trade what we feel or want to happen, what we trade what we see. And as soon as this value area breaches, again our play becomes the where it goes to is why I'm telling you this is this low volume node that we saw here is where it actually goes to. Okay, so this is the low volume. Let me draw it properly so that, okay, so this is the low volume node. Just a minute. Okay, this is the rectangle node. So this is the low volume node that we are expecting it to touch. Okay, so this zone, again I keep them marked because again value area highs and lows are the only places that can be extended. So I keep these zones also in my picture wherever it continues to, and this is a zone that we went up to. Now again, if you keep extending this zone, the market again opens gap up, and there is if you again see, it takes a sort of a resistance over here and breaks down. And where does it go to? Again, the POC of the high volume node of this value area that we have. So this is how you can build your context and I mean find or look for intraday plays. That is you can scalp also at these places. So even if you do not want to go short, let's say, so when we touch this zone and you see one indication on your footprint chart, you can scalp for 15-20 points because you can be sure that you will get some sort of a pullback as soon as we reach these zones. So the zones are, again, if you look over here, so if you draw zones over here, these are 2 zones. Okay, then this is 1 zone. So you can divide it as you want into the various zones that you have, or the various balance areas, depending on the volume that is transacted. If you see, look at the latest day, let me get delete everything and get it down. So if you look at this day, that is the second last day that we have had. So you look at this day, so you have one value area high and low that has been plotted here, and the next one is here. Okay, so and the low volume node is somewhere here. So this, it has been taking resistance. So let's say the market tries to sell off in the initial period. So what we're expecting is a break over here, and then maybe a break or a pullback of sorts. Of course, that would be very, very useful to scalp. Okay, now since we have discussed almost all variants of value areas, value area high and low, what I want to do next is, if you this is a 5-minute chart. Okay, what I've you can now implement this even again. I would recommend you practice it on an intraday time frame and then shift to lower time frame. So what firstly I want to do is shift it to 15 minutes rather than 5 minutes, so that we can have more clarity. And again, in the same manner you can go up and down. So you would be seeing that I have my footprint charts plotted something like this. It is because of this very reason. You can use these concepts of value, I mean volume profile, in your footprint charts as well, when you have the value areas, or rather the volumes plotted like this. Now the next thing that we're going to do is, we've selected bar here, we're going to go to the settings over here and just hide these things. Okay, so that I can see only the profile, and like this. Okay, now I have only the profiles that are being shown. Now the interesting part is, you can see these profiles, and if you go and hover over it, you will see the candles as well. The other thing that we can do is the step profile will shift it to 15 minutes, because we're looking at 15 minutes. Okay, and now we'll get the 15-minute volume profile, something like this. Okay, this is what we wanted to see. Now the same concepts are valid here as well. So the yellow lines that you see are the value area high and low lines, and similarly what I have here is the POCs extending wherever, I mean you will see these POCs extending which are which have not been tested, and until future intersection is the option that you can enable. So if you look at the previous few sessions, if you see wherever the high volume, and you see a sort of a high being made for that particular session or something like that, so this is basically a value area high or low zone. And if you look at it carefully, a lot of volume transacted here, and you see a POC over here, and the market moved after here. So obviously these would have been the sellers that have got absorbed. Similarly, these would have been the buyers that have got absorbed, and both these places are high volume bars. Okay, and this is what you start using as a reference. So for example, when we come here and we try to break this, and what we see is the value area of this zone, as soon as we break this zone, let me get this. So this is the same concept. So you see almost 3 bars having the value area absolutely close to each other, and the price, it's been trying to go up. If you look at it, look at the delta over here. Okay, and the last one, of course, even though the spread is more, look at the volume that slows down or reduces so much. So that is an indication that we might not go up, and again it was a balancing day. So when we breach this value area low, you can initiate a short. Again, the high would be the I mean the stop loss would be the high or somewhere above this box, and you target this. Again, what you see is when you see a breach of this value area, you can carry it forward, and you can play it on even smaller time frames, and the same ideas and the concepts apply. So if you open above this value area, you are expecting a touch of this value area high and the market to move up. So this happens on the Saturday. Of course, this is not a day that is of great significance, because the volumes were very, very low and it was a test session. But you can see the similar thing happening here. It tests the value area high of this zone and moves on top. So you can play this even on a 15-minute time frame, is what I'm trying to get at. Not only 15 minutes, you can go down to as low as 1 minute, but again you will need a lot of practice before you move down to 1 minute time frame. And I would rather recommend trying the 15 minutes first, then moving down to the 5 minutes and plotting these zones accordingly. So to summarize how you can use it on 15 minutes is, you have to look at the candles. Don't go into the value areas of all these candles. It will become too messy. You have to look at places where you have high volume. So like on this particular chart, this is the one that you can extend, and if you look at these candles, these value area highs, so something, this value area low is what you can extend, and this value area high is what you can extend. So why have I drawn these zones? Because I'm expecting the market to be hovering around in these two zones for a long time before it finally breaches. And when it breaches, so you can see what I'm trying to get at. When it breaches here, it tries to go up, but it is not able to take out the upper POC that we have here. It fails, and as soon as it enters this zone that we're talking about, we can expect a touch of at least this zone. It finally does break that, goes down, and the next day is up. So within this chart, you can see these zones that we have divided ourselves into. This is the first one, this is the second one, this is the third one. So what we're expecting when we breach this zone is a touch of this zone, and then maybe hover around and then see where we finally play out. So you can do this on a 15-minute time frame, on a 5-minute time frame, and if the market is trending, of course you will not see moves like this. Wherever the big bars are and the big value areas are, you mark those zones along with the POC. If they're not breached immediately, for example POCs like this one and this one, you carry them forward. Okay, so this POC is still valid and legit because it has not been breached, so you can carry this 48,100 into your future as a future reference. So hopefully I was able to convey something new, and you were able to learn something new in this video. Until next time, thank you guys, bye bye.